Greetings, everybody. This is Jeff Scott. By the time you get this, it will be Sunday morning or super late Saturday night. And this is my top-down review for September 26, 2021. As always, you can reach me via my email address at hgsidoc@gmail.com or under the remarks and comments section that you'll find on YouTube underneath the video. As I mentioned last time, I record this in 4K. It takes a while for YouTube to get it up to 4K. Don't watch it in standard definition. Below the video will be a link to download it in 4K or wait for them to put the HD version. All right, so I called today correction averted and approach the market with an open mind. I think it's got to be an open mind because I can't say for sure we're going up. Can't say for sure we're going down. It certainly felt like we were going down last weekend when I did this, but let's see what I think as we go forward. As always, this is for educational purposes only. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. When I do education, and I will be retiring in about a year, I will probably restart my live meetings and see what else I can do on an education perspective. Don't want to interfere with retirement, and I've got a grandkid about to pop, so those will be more important. But I call my education Be Your Own Guru. You know, I did research and helped to get some drugs approved in oncology, so I'm a researcher there, I'm a developer there. I'm not a researcher and developer in trading. I've learned from other people. And what I've done differently, or how I've done it, is I've just mashed it together with my style. And you can see some of the influences, but not all of them are up here. I own a lot of software. I was going to do something, but it seemed to not like what I was going to do. I own a lot of different software. If you come through during the day, you'll see TradeStation, Thinkorswim. There's a new product called Wealth Charts that I've been playing with. I do Hgsi for most of my analysis, EdgeRater for some of the analysis. And then if you look at my TradeStation and Thinkorswim, you'll see John Person's stuff, and you'll probably see you'll see the Q and the Dr. K tools as well. I'm never paid by any vendor when you buy something that I suggest or use. Any affiliate fee offered to me is passed to the purchaser as a discount. I am an unpaid volunteer. This is just education. Here's the website for Hgsi. I'm not involved or affiliated, but under a free 30-day trial, they actually give you 30 days without a credit card. If you do this and you email me at hgsidoc@gmail.com, I can share some videos to get started. And speaking of in video, under investing strategies, you'll find hundreds, if not more, between Ron Brown and myself. Speaking of Ron Brown, great guy. He was Ian's sidekick for a number of years in the back half of Ian's education career. Ron and I both use Hgsi extensively. We often trade the same name stocks, but probably differently. And we certainly find them differently. Ron has really become a student of volume spread analysis, something that was built into Hgsi at no charge. And I think Ron is talking about launching another seminar. They're very well worth it. Almost every day he does a video, lots of handouts, and it's really a great way of learning Hgsi. And I would contact Ron Brown or Hgsi for more information. Stock patterns are cyclical. It really felt we were moving down last week. And you tell me you didn't feel like we were entering the fear phase. Now, it changed by the middle of the week, probably by the middle of Tuesday. And we ended up with a move back up. Now, we're still in a downtrend because we haven't taken out prior highs. And until proven differently, it looks like we got lower highs and lower lows. Also, until proven differently, are we just still in the same trading range at the top where every time it looks like it's done, it races back up to the top and it falls back? Think about what the Russell's been doing. It certainly feels like the markets want to go higher, but I do think there's still a lot of countercurrents out there, and it's not a certain thing, especially entering October. So I have cash, smaller positions. I've bought some puts, although I have less of them right now. I use a lot of contra ETFs and options on futures as hedges. They're mostly off, but my thumb is ready, or little finger is ready to put them back on. And I've got a lot of cash for when this market settles down. Um, Here is how the week ended on Friday. This is Friday charts. And there's certain things that stand out here. Financials are mostly green. Technology, mostly green, despite rising rates. We'll see how long that can hold for. On the other hand, healthcare weakened some and had been strong. Real estate is really weak. And where's the utilities here? Probably right in front of my face. Utilities were mixed. So at best, I'd say it was a mixed end of the week, but what a recovery it was. So let's jump into Think or Swim, which is what I like to do at this point. And rather than just use my slide deck, let's go ahead and bring some things up to look at. So here are the futures. I'll start with futures because that's what I'm pretty much watching during the day and the night, as it turns out. And this are, make sure I'm in daily. I'm in daily, maximize the sell. So we've had a wonderful run up. And what's happened? Once, this is going back a year. Once, twice, 3, 4, 5, 6, 7, 8, 9. Now 10 times we've hit the 50-day and we ultimately have recovered. I certainly prefer these types of pops where you're just there for a day or hours and you pop back up. But we have had complex pullbacks where it took a couple days to get back up. And perhaps the most complex of them was right here. So notice that the S&P futures did retake their 50, had a new John Person buy signal, and this is after the sell signal that was pretty darn accurate up here. So a new buy signal on the S&P futures as of the end of the day on Friday. Are you more bullish or bearish? This retaking this, I mean, this could have turned into resistance, and it still may. But to me, I think the market's probably going higher there. If we look at the Nasdaq futures, not nearly as straight of a line, but the similar theme is it has stayed below the 50 for periods of time. Other times it bounces like it did back here. And very quickly, the Nasdaq futures are back above the 50. And we'll talk about the candlestick on the weekly. If we look at the Dow futures, let me neutralize the time here, make it the same. You know, the Dow futures have been pretty sideways since June. And they have broken down the furthest, but they've done that back here. But look how many times, this is back in November, but how many times we've broken through the 50 and ultimately got back on and went to new highs. We're still below the 50 here. We do have a new buy signal that came in on the Dow. So more bullish than bearish, but still concerned this could still turn into be resistance. On the Nasdaq, I didn't comment on signals because the Nasdaq, at least in Thinkorswim, is still in a person sell. If we look at the Russell, this one's been, except for the initial run up at the beginning of the year, this thing has just been plain old sideways. And it's got a new buy signal. It's above its 17-day moving average. In some ways, probably the strongest of the bunch if you look at position related to moving averages. And if you, like me, have a small cap growth portfolio, a Cancelam-like portfolio, you probably had a good week. My week, when you look at the numbers, is hard to interpret. I have more money than I started the week with. But as I said last weekend, my hedges would limit the returns both ways. The VIX, well, you know, it felt like it was going to go higher on the weekend. And this, I believe, was Monday. And when you saw this reversal, you kind of knew what was going to happen. And it's come back into the 50 days. So the VIX did not hold up. And the dollar, despite the 10-year going up and despite a relatively hawkish Fed, this is a daily chart. You know, this looks impressive, but when I show you the weekly, you're going to see how low in the pattern the dollar is. And see, this is the 200 days, so that should give you the idea. So it went up initially with the Fed speak, It came down on Thursday and then bounced a little bit on Friday. So the dollar really going just sideways. So the daily futures don't look too worrisome. If I flip this to the weekly, you could see highs of the year are not far, but I want to do this. I don't always go down to the weeklies, but the reason why I think we could go higher on Monday, we've got a hammer on the S&P futures at the 17-day weekly, kind of like the 50-day. If we look at the Nasdaq futures, for the week we have a hammer. If we look at the Dow futures, I don't like this, it's still below the 17-day, but 17-week, but we have a hammer. If I look at the Russell futures, we have a hammer. And then the VIX, we kind of have a little bit of a shooting star, but that's probably too thick to be a shooting star. Certainly have a topping wick. And the dollar, sideways move, you have a doji. So indecision. So the weekly futures suggest to me that we open up and go higher this week, but I'm smart enough to know that it's Saturday, nothing's open, and there's lots of news, and China can still decide maybe we're going to go after a biotech next time and kill companies like Beijing. It's just nutso. All right. Now, I also like to look at the extended move, and I thought last week was really good to show you kind of why I do that. You have to know when to get back into the market. And what I've said before, for newbies, and I'm not the world's biggest genius on this stuff, the expected move would be the price that you would pay for a straddle or a strangle. A straddle where you would buy an at-the-money call and buy an at-the-money put. And the person selling it to you is the smartest people in the market, which are the market makers. And they're going to price it so that odds are you're going to lose some money. And that it's going to take a move beyond the price of those two options for you to be profitable. And we know from prior discussions, about 80% of the time, the stock price will finish within the expected moves. So here is the S&P futures, and you could see a week ago Friday, the market sold off. In fact, you had a 3-day hard sell-off, Wednesday, Thursday, Friday. Now, on Friday, it actually closed below the expected move of the week. So think about it. You're going to pay whatever this distance is, the total expected move, you're going to pay half of it for a call, half of it for the put, and you're going to finish either in between these, in which case they'll be worth less than the options you bought, or above and below, in which case you made money on the trade. The market makers are smart, and about 80% of the time they're there. So last week, the prior week, we did close below. Now, we traded below, we closed up here. I take that back. So we actually rallied in the end and closed above the expected move. So who won on this day? The market makers. Now, what happened this week? And why did I feel like it was good to get back into the market on Tuesday and Wednesday? Monday, we just had another continuation. And actually, I just flubbed that. So let me review what I just said. We had Thursday and Friday here. We closed within the move. On Monday, the center line is defined by the close of the prior Friday. This is Monday's bar. Monday just dived, traded below the expected move, and came back in. Tuesday, we had sort of a shooting star. And then Wednesday, we traded up. And it was on this Wednesday that I felt some conviction to get back into the market and take off my hedges. Where did we close? Right in the middle between the green and the red, obviously favorable. So that call is going to be profitable to some extent. Your break even would have been if you got above here, and your put that you bought goes to zero. So the market makers did well, and it's this reversal that we saw come Wednesday that was a signal on the S&P. I think it's more obvious on some of the others. Here is the Nasdaq. We traded down to the bottom of the expected move, closed in the same place on Tuesday, and then Wednesday when we took out that high, or any time in this beginning of this day, it was pretty clear the market was going higher, closing right in the middle. Market makers win again. The Dow, same as the Nasdaq, traded below the bottom on Monday, closed right above it. Tuesday really closed where we opened, and then a strong bar on Wednesday said coast is clear, get back into the market. If we look at the Russell, similar pattern here. The VIX is going to be up on Monday, and you're now outside the range that we expect you to stay in 80% of the time. And then a shooting star traded down. It was time to cover my VIX positions, which I did. And the dollar, which really did nothing during the week, despite the Fed. I guess the expected range was pretty darn big, expected move because of the Fed meeting. And then the other thing I like to use is channels. And you broke down, and this is probably the negative news of so far, of why I may be too bullish and why I'm going to enter with an open mind. This channel has held going back for months. This was the deepest break of the channel yet. We have traded twice into that channel and failed. That channel could turn into resistance. So I'd like to see a move above and into the channel very quickly on Monday. The Nasdaq, similar story, has not gotten back up to test it. This is the diamonds, again, broke below pretty decisively, has not retested it. And then lastly, the Russell has not come out of its trading range. And it's been good to sell, 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 and buy, and we're in the middle right now. So these are on different monitors during the day, and it gives me a nice clue as to what's going on. So what's going on underneath? 10-year really moved up this week. Think back to earlier this year as we were starting here and look at what the S&P did as the rates started going up. So this is a danger sign, potentially. Now, personally, I'll be happy when the rates get above this white line, because really low rates are worrisome because it makes you wonder, is the economy that much worse than they're telling us? But I think if we go up in a straight line, we'll see the same impact on the market. Now, this is the 10-year. The 30 years moved up a bit, but much more muted. AD lines and price have not taken out their highs yet, but they've turned up. You can see it better on the NYSE. You still got lower highs, but now you got a higher low here. So it's very possible that this is going to run back up. And you can notice up here that except for transports down here, the major market ETFs turned up as well. Rates up, bonds down, and that's what this blue line is. Now, breadth improved as the markets improved during the week. You can see stocks above the 200% moved up a bit. Stocks above the 40, the percent moved up a bit more. 3-month new high, new low, rebounded a lot from where we closed last Friday to where we closed here. Now, you can change this to it weekly, hourly, daily, whatever. And I like to look at it intraday. And you can see on the intraday, and this was on Monday, or is this Tuesday? This might be Tuesday. 1921. I think this is Monday and Tuesday. We actually pulled down to a very low level and the market bounced. Now this is looking at weekly closes. So intraday, we got 50, 60% or more of stocks in the S&P 1500 and Sager's tool, for example, trading below their Bollinger Band. And here, clearly the number of new high, new lows got to a reversal area. Daily McClellan, I don't really see a whole lot here. We took the 50, which is great, but not a whole lot else. And we're certainly not at an extreme. I'm not looking at divergences because we're not at a high. So not much to say about the McClellan. The buckets, they tell a good story. We go in, we close the market on Friday neutral. 55% of stocks below the midline, their Bollinger Bands, 45% above, about 10% above their bands, which is a modest, no big deal number. Hardly anybody is below their bands. If you go back to Monday night, and again, it got worse on Tuesday before the market reversed, 85% of the stocks were below their Bollinger Band midline, and almost 25 were below the bands. In an uptrend, stocks will bounce between their upper Bollinger Band and the midline. In a downtrend, they typically bounce between the midline and the lower band. So a big recovery in the market shown by the buckets. No evidence of a Hindenburg omen. That's not a surprise. Classically, we should only look at on the NYSE. And the main reason we don't have that is because not enough new lows. Market tone. Well, we had a few days, Thursday, Friday, Monday, that were very bearish. And then on Wednesday and Thursday, we had some kahunas hit and the market flipped to a more neutral posture. Now, growth leads the market reversal. I don't think the edge rater warehouse view tells me a whole lot. You could see high EPS rank had a higher return, but so did no EPS rank. Relative strength had a better return. Low relative strength was negative. So that's showing me that growth mattered. Now, the problem with this list is it's static. And as I said last week, I started the market prepared for it to go down, and then I had to rapidly change. This only reflects what I ended the week last Friday on, and you could see I was down a teeny weeny bit. But like I said, the market, I changed midweek, so I was up on my account. You can see the S&P 500 was up 0.57, and with small cap growth, the 50 doing well, you can see the IBD indexes actually outperformed, which is a really nice thing because I'm a growth guy. Sectors, you'd expect in raising rates, energy and at least financials are up, energy's up as well, and weakness would be in staples, utilities, and real estate. Now, keep in mind, because there's going to be some modest differences as I go into the Edge Rater tool, that S&P 1500 is the source for the sector rotation in Edge Rater, in Q, and the S&P 500 in Edge Rater. So what we could see here is that over one day, it was a 50-50 market. Over the last 2 days, most of the stocks, industry groups, and sectors were up. Over 5 days, a little bit better than 50-50 were positive. And really, that's what it's been over the last month. And it's not been consistent. It's back and forth, back and forth, back and forth. If you had looked at this Monday or Tuesday afternoon, you would have been in the 40s and 50s and higher, just showing you that the market really had sold off too much. On the week, it looks like 8 sectors were up versus 3 down in the S&P 1500. And you can see in red, which would be, I believe, the 1 week, how well for example, the energy has done really over the last month. If we look at just 1 day's performance, it was a 5 and 6. So in red, 1 day, you have more to the downside than the upside. So not a super strong week, not a super strong Friday, but it's sort of the sum of the 5 days ended up relatively neutral. Now, if we look at the end of the day Friday, communication, financials, and energy were leading. And in Q, I can just look at the industry groups. From those, I can rank them. I don't know what to do with publishing. I guess that's communication services. There's that Marion, I think it's called. And then you had a takeout of somebody who I can't remember. And then you got a bunch of energy, oil, gas drilling, exploration, integrated. You've got diversified banks, regional banks, insurance brokers, or the financials. And then what I can do is I can highlight, say, the top, everything above 130. hit this thing, and then I get a list of stocks in those industry groups, and then Sager's got a thing here that lets me hit the crown, and then the stocks that have the best earnings, the best valuation and good earnings will come to the top. And Google would be the stock that really stood out here, and we'll look at that later on. Canaries in the coal mine were not at the all-time highs. They were back here, which would be in January this year, sort of when the Russell peaked. But if I had to guess higher or lower, they've held up well. They did not break down at all with this. They bounced off the 50. They took out their PSAR data on Friday. They had a kahuna, mobile breakup from a squeeze. I think these things go higher. How about the 50? Here's your new leader, the IBD 50 small cap ETF. Problem with this guy is it's got very low float. But that said, it's broken out to all-time highs, at least new highs for the year. And I actually entered a position in it. It might be painful getting out, but I got in. News and earnings. I thought Friday would be the monthly unemployment report, but I know often when the first of the month is on Friday, they push it to the next week. So it's a little lighter week in news, but there's still some big things. We got capital and durable goods on Monday. We got Case-Shiller home price and consumer confidence on Tuesday. Home sales on Wednesday, jobless claims and GDP revision on Thursday, PMI on Thursday, and then a bunch of inflation numbers, ISM manufacturing on Friday. So medium to high, I guess, not a light week. Light week on earnings, you could see them here if you own them. It's not a light week. And as I said, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So SP was down as much as 3% early in the week, and it turned around, finished with a 0.5% gain, as was the Russell. The Nasdaq was up a little bit. Dow was up 0.6. So the underperformer was the Nasdaq. Energy and financials led. So it was an interesting week with the bears starting the week in firm control, but by midweek, despite news flow in the Fed, the bulls were back. The bulls were back. The markets dropped through support on Monday. By the end of the week, we're looking to retake them, especially those channels. Of course, we have a new week coming. October remains one of the more volatile months of the year. And one hopes that was one support does not turn into firm resistance. And perhaps we'll start to see a rally develop in October into the new year. News flow will remain key, whether it's China, the Fed, the rates, or Congress, all kinds of risks there. I entered the week, this past week, with substantial protection, including puts on major positions, TQQQ shorts, USD long, and SPX shorts. That meant that Monday, when most of the market participants who were long were feeling pain, I was down, but just down a teeny bit. By Tuesday, I covered many of them. By Thursday, most of my hedges were off, as the market seemed to be okay with the more hawkish Fed. I still have plenty of cash to deploy. I'll keep my options open. I'll wait and see how the market opens up. If we retake and retest the regression channels and moving averages, I'll start to deploy more cash. Lastly, from time to time, I sell computers. The computers I sell are the personal computers that I use. I have an addiction to buying computers. So these are all, this one's brand new. Well, it's not brand new. I think I got it in April. Could have been, it was in April, I believe, maybe March. It's a current model. Now this is a killer machine. Now, if you just want it for games, some of the gaming stuff's been deactivated because I don't want to use up power. So I don't have the fancy lights around it on the outside, because do you really want to see red, yellow, blue while you're trading stocks? I want to see red and green. Red if I'm short and green if I'm long. Now, the insides of this are the key. It's got a Ryzen 9 5900HX processor. I've yet to have a TradeStation scan or radar screen that can't handle. I upgraded it to 64 gigabytes of RAM. I upgraded the 1 by 1 terabyte SSD that it comes with to 2 by 2, so a total of 4 terabytes. And I put in as good SSDs that were available. It has the highest end NVIDIA card for a notebook, which is an RTX 3080, Windows 10, Why am I getting rid of it? I prefer a 4K screen. This one maxed out at 2.5K. If your vision is not super, you don't want a 4K screen, maybe in a year or two I'll go back to the size, but it's still got a great resolution. And for those that have not bought a computer from me before, I pack them with some of my prior meetings, some of the indicators that I have, some that Bob Mager has made for me, some TradeStation stuff, and just a ton of education that I can promise you the education I give you, you have to sign a non-disclosure, of course, is worth more money than the computer that you're buying. So I bought this for probably 4,500 plus. It's in great shape. It's got a 2-year warranty, and I'll take 3,000 in shipping. If you're interested, just email me at hgsidoc@gmail.com. People who've been on this for a while know that I go through computers quickly. I'd rather sell it here than on eBay just because the value is the stuff I put on, and the fact that this is really good for a trader. On eBay, it's just gamers, and they don't care about the SSDs, etc. So on that move, let's move into the markets. Close that. Now I often like to look at TradeStation to start, and let's move into this view here. The one that I look at, about 6 different things to test where I think the market's going higher or lower. E-minis. So I see some really good stuff here. What I don't like, well, I'll start with what I like. We got a green paint bar, a green daily, that's Alexander Elder impulse indicator. When it's green, you could be going long, or you could be holding. You should not be going short. We've got both a Laguerre RSI and a John Person buy signal. You can see how these signals have been pretty accurate. The sell signal here had a sell and a Laguerre sell. So that's pretty exciting. I don't like the fact we're in a weekly sell, but that could probably go away quickly as we rebounded this week. Monthly, we're in a long-term buy. Here's your Laguerre RSI turning positive. Your high jump is neutral. You're in the middle of the envelope. I look at this and I would say it's more likely going higher than lower, but talk to me Monday at 9:31. The Dow Futures, similar, Laguerre RSI and a person buy, green, weekly sell, in the middle of its channel. Usually once it does this, it goes and tests the upper part of the channel. So that would tell me I expect the Dow to still go higher. Russell, similar story. It's already moved more than the others. And then the Nasdaq, you can see, doesn't have a Laguerre signal, but it's probably very, very close. Like another update should get that. It's also blue, not green. So the Nasdaq probably lagged a little bit this week. So maybe that's not a surprise. And I like to look at the dollar, which had been in a buy in a Laguerre RSI, and you see it continues to be green, weekly buy. Now these red dots here on the weekly are because you've got higher highs in price versus back here, and you have less of a MACD histogram. So that's just to tell me that there could be some MACD divergence, which would be a sign perhaps of less market strength, and perhaps more likely that this market may get tired. All right, let's keep on going. Now let's go into Hgsi, and the first thing I do is I find my market analysis user groups. I go Major Markets Plus. I hit the warehouse view, and I rank them by top-down view. Now I just updated this since I reviewed them, so I wonder if everything's there or not. I noticed that natural gas and oil and commodities are up at the, well, wait a second. Yep, I'm listed by raw combo. So isn't that interesting? Gas, oil, commodities, TBF, so interest rates, Up at the top, dollars near the top. And on the bottom, we've got the VIX, some ARKs, gold miners, silver, bonds, Bitcoin, biotech, ARK Innovation down near the bottom. Notice the red on these for both 5 days and 1 day. So even though the IBD 50 we'll look at in a second, some of the ARK stuff did not seem to follow through with that. So let's take a look at the S&P 500 as soon as I can dig it up here. So if you're new to me, I'm not going to use tonight to explain all my indicators, but I'll make it really easy on you. If it's green, it's good. If it's blue, it's good. If it's red, it's bad. And if you're new and you want to learn more, send me an email, hgsidoc@gmail.com, and I will send you a video that will give you some insight into how I use these indicators. So, steady run up on this is the cash market, and you could see what happened on Friday, which we already talked about a few times. We've retaken the 50. We're right below the 17 of the PSAR dot. We had a John Person buy signal come in. So if I had to be a buyer or a seller, I'd probably be a buyer here. If I look at the Dow Jones Industrial, and why do I look at these things 7 times, you're probably asking? Because you tell me on Monday that your stock picking on the weekend made you money. And I'll laugh because it didn't. Because what we both know is that the market determines so much of what happens. And when the market's down like it was on Monday, you'd have to be the world's best stock picker to have won because you're long and long only the right stocks. Of course, there were some stocks that did great, but most did not. So what do we see here? On the Dow Jones Average, had a doji, it looks like, on Friday. New person buy signal, a bunch of kahunas, improvement in relative strength. So again, would I be a buyer or a seller? I'd like to see it get above this 50 here. Actually, this is the 50 here. But I'd be more long than short just looking at this. Let's look at the Russell 2000. Has really stayed within this trading range and is sitting on its 17. Look at the 3 kahunas in a row, a mobile breakout from a squeeze, and a person buy. If this was a stock, I'd be all over it saying it's going to go higher. Maybe that means something. I don't know. I can't tell you. I'm just looking at it and see what I think. Nasdaq Composite, you can see on the weekend, pull back, close up a little bit after a pretty big pull down. Again, a new John Person buy. If I had to be a buyer or seller in these, I'd be a buyer in the major indexes. The thing I like the most is the IBD 50 ETF, and look what it did. Now, it didn't do much on Friday. I call that pretty much an inside day. But look at the big move up on Thursday, Wednesday, Monday, traded down, closed it near the high of the day, gapped up Tuesday, gapped up Wednesday, gapped up Thursday. The reason why I'm not real big on this thing is it's got like no volume. Must have had volume here. Volume on this day was what? 324,000. So it looks like a lot of volume. It still was no volume. It's hard for me to tell you to buy something. I think the IBD 50 right now is your leading indicator of this market. Look how different this is than the other indexes. And it's even outperforming the microsectors FANG, which apparently is not in this. So it's FNGU. When I updated Ron Brown's files, it took out some of the things that I use. So here's FNGU. This is more your typical thing. So let's quick add group to second market analysis groups. And that way it'll be here the next time I look. Awesome. So the FANG, as I showed you in a different view, not at its all-time high, but really in a nice uptrend. And when I looked at it, I thought it's poised to go higher, I think is what I called it on the other slide. Okay, now In Nasdaq, I also have an interest in biotech. Biotech was weak on Friday, still above the 50. Semiconductors, these are ones I wonder about with the rising rates. Still did just fine, above the 50, above the 17. Um, some of the ARC stuff. If this market's out of the woods, and no pun intended, I would expect ARKK to be going up. So this is weak. I heard some people with a strategy, and it actually was an interesting strategy where they were recommending buying the IBD 50 type stocks and shorting the ARKK. Probably wouldn't do that, but this one is much weaker than IBD 50. No surprise because we've already talked about the dollar. The dollar, here's the long-term dollar. Oops, this is bearish. Never mind, I can't read. Here's the dollar. It's up, but look how far down it's come. So yeah, it's up off the bottom, but it's hard for me to say the dollar is super strong. Gapped up some on Friday, had a mobile breakout. I mean, does the dollar look like it's going up or down? I would say the dollar looks like it's going up, but I can't say that for sure. Dollar's good. You know what gold is? Not so good. Gold is breaking down. Silver breaking down, and gold miners breaking down. There are gold bugs. I'm not one of them. Eventually gold will go higher, but I probably wouldn't touch gold until it broke above my trend line here and stayed there. We shall see. All right, what else do I want to look at? Oil. Energy strong, and look at oil. It's hard to believe that, remember when oil went negative last year? That was a joke. If you only had a few empty tankers in the Gulf, people would have paid you to take their barrels of oil. Oil, especially on the weekly, strong. All right. Next, I look at industry groups. I hit F7. We're at 42 minutes. This is better than I've been of late. Let's take this guy out. So I don't need the index of indexes. This is what happens when I get a Ron Brown update, which is awesome. He does this for free for most of us. Well, you can subscribe to him, and I do, but I think you get his updates when he wants to release them to the main board for free. So we've got 173 or 4 or 5 industry groups. And if I look at, if I look at 2-day up, I'll see that 61 are positive. And if I look at 2-day down, 27. So short term, this market is bullish, is strong. Okay, so if I look at 5-day, a more intermediate term down, I've got 28, and 5-day up, got 64. So despite Monday and half of Tuesday, there's strength in this market. So let's take a look at the leaders to the upside. So I use this 2-day force as a measure of momentum, and this thing is still here, so we'll just ignore it. I should have come out. Let me try this one more time. And if you're looking for it, it's on my other computer. Okay, and I don't want to add it. Okay. Generate index, no. Okay. In fact, let me go here. No, I don't want to do that. So if we rank these by raw combo, you can see the top group is semiconductor devices. And we highlight it with the left click, right click. I changed industry group, and these are the stocks in that group. So I like to look at the first couple. Wow, 99 relative strength. Here's a stock that's breaking out, but Look at on the high jump bar after a Bible gap up. Interesting play, not a lot of revenue or earnings. I would have loved to have been on this, but the way I buy stocks, I would have bought it over here in this range, mobile breakup from a squeeze and taken out the 50. I wasn't looking. My opinion would be this is too far gone and I would pass. AMD, big run up. You can see it on the weekly, a pullback. You know, it looks like an opportune buy point if you get a little bit of momentum and a move up. This is the chandelier stop. It might be too far to wait to buy it, but I'd like to see it move up. It's on my buy watch list. It's got good earnings. Texas Instruments, here's one that right up here broke out above the chandelier, mobile breakout from a squeeze, person buy, pocket pivots, kahuna. I didn't buy it. I wish I did. Probably getting late to chase. And there's the industry group. Now I'm going to right click, left click back, highlight the next one, which is not a typical one for us, which is advertising. And then I am going to right click and then left click, change the index group. And only one is above. That's all we're going to look at is Marin. I mean, this is my sucker pattern. This is a meme stock. It must be to do this. It had a big run. It was worth nothing. Now you got zillions of shares traded a day. I hate this pattern. Now I do sometimes buy it on the second bump like you have here, but this has got to be a let the buyer beware. This is a very high risk pattern and you're likely to lose money and the option premium is going to be ridiculous. Expiration and production, we've looked at this several times last couple of weeks. I've added a couple. Some of these are way too far gone. ConocoPhillips broke out, moved too far gone for my taste, although who knows, may still go higher. Devon broke out. Pioneer, I like this one still. I don't know why my dog's barking, he scared me. This one broke out here. Mobile breakout from a squeeze. Pocket pivots, kahunas. I think he's having a nightmare because he's sleeping. I don't know if you can hear him. It's kind of funny. But Pioneer Natural Resources looks like it's ready to break out and it's less extended than some of the others. Amazing earnings per share growth and it pays a 2.3% dividend. It's just expensive. Apache, a less expensive stock starting its run. Here's one that hasn't broke out much, Occidental Petroleum, EOG. Marathon's another one that's starting a run, I believe, hasn't gone too far. A lot to love here. Just look at the earnings per share growth with oil trading between 60 and 70. And the economy starting to increase in utilization as things come back. I think it's a very bullish time for energy and EMPs are good. There's more. I mean, Diamondback, here's CPE. Ready to run, as is Diamondback. So these are great looking stocks. Some have moved some too far already, but you probably need to be in some of them. Internet media, look at a couple of these. Snap, I've never used this. I don't understand it. I don't get what it's about, but Snap is breaking out here. Bunch of kahunas and pocket pivots, took out a chandelier stop. It's already moved a lot, but it looks like it wants to go higher. Facebook got beat up on news and legal threats that continue to be a challenge. Dropped down to this, which is 100-day simple moving average installed. Had a doji on it, traded up on Friday. This might be interesting to sell some puts down here, but you got to know what you're doing to do that. Google, probably one of my favorite charts on the bunch. Uptrend, pullback and a sideways move, sitting right below its chandelier stop and PSAR. A new John person buy signal, continues with great earnings per share growth. The multiples come down. I think if it takes out that PSAR, that I will be long Google. Whether it's Google or Goog, to be determined. Twitter, also breaking above its 50. There's the other alphabet. Hgsi Interactive, don't know much about this company. Um, doesn't have a ton of volume, but two big kahunas, a mobile breakup from the squeeze, and a new John Person buy signal. Probably news driven. I'd probably not just run out and buy it because I like the chart. I'd probably go and try and learn what happened. Automobile index, Tesla, I said earlier I'd buy it off of it here. It looks buyable again. I mean, Tesla does well. Then the ARKK probably does well as well. Mobile breakup from a squeeze. A Kahuna looks okay. It's just a super expensive stock. I love Ford Motors. I saw my first Mustang. I've been in this for a little bit, and it looks like it's getting ready to, or it's broken out. Mobile breakup from a squeeze, couple of kahunas in a row. I'm already in it. A lot cheaper than Tesla. GM, all right. Just going through the list here. The next one's casinos and gaming. TG Watkins, who is the Moxie trader and Simpler Trader, and somebody I've known before he was in Simpler Trader, sent me a list of stocks late in the day Friday that he was surprised they were all popping up. Airplanes, hotels, casinos. And I think the reason is, and Gottlieb has been saying it all weekend on the TV as he's been pumping his new book, is we've probably surpassed the peak of COVID for the Delta variant. So as we go back on the road, back on vacation, back to Vegas, here's MGM. They've all run some already. International Gaming Technology, Caesars, Penn National. This is more with a regional play and an online gambling, which is probably the other thing that's driving some of the gaming stocks. The message I have here is these look interesting. I don't see big differentiation in the charts. They've started to run. And if we really are going back to Vegas, then these things are probably going to go higher. Banks. Boy, were there a lot of regional banks this week that looked interesting. A lot. Here's Truist, 3.2% dividend. Earnings are good. Multiple 11, less than their earnings. If rates go up, these guys should do great. Look at the sideways move here in price and look at how market catchers improved, showing that the relative strength has improved. Mobile breakout from a squeeze, pocket pivot, multiple kahunas, and you'll see this is on my buy watch list. SVB Financial looks good. They're all going to look good. Fifth Third is another one that made it to my buy watch list. Regions is an older name, still a good name. Look at the sideways move and positive divergence or convergence on market catcher. I think these guys have a chance of shining. If I look at KRE, which is an ETF of these people, looks just like the stocks breaking out here. 2.1% dividend, 9 million shares traded. If you don't want to figure out which name to buy KRE, and I think you're going to make money. Airlines, as I said before, COVID peaking. So a lot of these look good. I like American here, the first one on the list. Bongos are green, mobile breakup from a squeeze, broke out above its stop and pocket pivots, kahunas. I think this one looked interesting, but you're buying beaten up industries here. You're not buying growth stocks. United, okay. Delta, got to get above that 200. Southwest, got to get above the 200. Alaska, a break above the 200. I might find that interesting. This might be my second favorite of these. All right, that's airlines. Cruise lines, these things have all had the crap beat out of them. Carnival, look, you're bottom fishing, but you got mobile breakouts from squeezes. Bongos have gone green. John Person buy. You took out your stop here, and multiple pocket pivots and kahunas. So would I buy Carnival? It's on my buy watch list. Do I think it's going to go to the moon? No. But I might be able to define my risk. So for example, The high of the day was 25.95. We'll call it 26 among friends. 1, 2, 3. This day, the low of this day was 22.86. So $3.20. That's too much. Where's the stop? Here's the 50. What's the 50 at on this day? About 22.90. So still too far of a range for me to be happy with. I'd rather be a 4% risk, but I would have no trouble buying Carnival if it takes out the high on Friday. So it gets maybe 30 and a nickel, which is, or you have to move about 60 cents to get there, but I want to make sure it moves and it just doesn't fail, which has failed plenty of times. And I'd put my stop perhaps even under the chandelier here, and the chandelier was at 22.82. So you're going to buy it at 26. You're going to have your stop in the 23 range. It was 24.60. I'm thinking in my mind where I want to put my stop. And you know what? The chandelier is the green thing. I'm going to put the stop right under the 200, which is at 24. So I'll have a buy stop at 26.05. I sell stop at 24.60. So I'd be risking about 7%. I'm comfortable with that. When you look at this group, Carnival looks like it's going higher. Norwegian broke out above the 200 as well. Royal probably the leader in the group, but also the most expensive. Here's a Carnival ADRs. We already looked at that. So cruise lines look interesting. Again, that back to normal. And then communications equipment, we'll look at that one. So Apple, I probably got less Apple now than I've had in a long time. I'm okay with that. I just don't get the 13 story. Maybe I'm just a naysayer. I bought every new Apple that's come out, iPad, iPhone, every generation. I'm not buying this one. It's too much work to switch my stuff. And I don't even use the camera that much except to take pictures of the stuff I'm selling. So we'll see what Apple does. But if the market goes higher, you expect Apple to get above its stop and to participate as well. Cisco, Ericsson, ADR. I don't see a whole lot there that I love. So believe it or not, we're less than an hour. We've gone through the top 10 industry groups, exhaustive look at the market, my thoughts on where we're going to go. And let's just finish by reviewing my buy watch list, and then we're going to say goodnight. Remember what I just called that. I didn't call it a buy list. I called it a buy watch list. And that's a very important differentiation. It's an important differentiation because I may buy all of these, unlikely. I may buy none of these. I may buy things that I find during the week that aren't even on here. But I'm going to go into Monday with what appears to be a number of wolf packs or collections of stocks in a specific industry group. I am going to have them loaded, for example, in Thinkorswim with a number of my indicators. The people that buy my computers get most of these as well, except for some that are proprietary and I don't cheat. But Bob Meager has made me some really great indicators that I include. But I can watch during the day looking for signals to occur. For those that prefer TradeStation, I will drop my buy watch list into one of many radar screens on my different computers. I've got 3 different accounts for TradeStation, and I'll be able to monitor for various signals that occur during the day. So this helps me identify during the day if things on my buy watch list become attractive. If I look at this, just think about those top 10 groups. You got some advertising, got some airlines, you got banks, you got consumer finance, banks, EPs, cruise lines, internet-based services, internet media, a life insurance, which is financials, and semiconductor devices. Some I like more than others. I'll run through very quickly with comments about them, and then we're done. Interpublic group of companies, I guess it's IPG, breaking out, sideways move. We're a couple days late. Doesn't have great earnings per share. If we get a day of softness and pulls back into the 50-ish area, I might jump on it. I don't chase. Omnicom is another one in the advertising group, broke above the 200. Positive convergence on the market catcher. Mosaic, I have a significant position here. This guy has, I don't think it's a cup, but it's had a shallow saucer pullback, is breaking out here. 3 days in a row, kahunas, that tells a story to me. Buy, buy, buy. Mobile breakout from a squeeze, teeny weeny dividend, and pretty good earnings per share growth. It's run already, and like all these stocks I'm looking at, I'm just telling you what I'm looking at. It's not a buy recommendation. As I said, I'm not buying them, I'm watching them. Here is Nutrien, another company that's had a big run in the agricultural chemical fertilizer space. Spirit AeroSystems. If this market goes up, I expect Boeing to participate. If Boeing participates and has any good news, Spirit AeroSystems, which makes their airframes, will probably go up with it. I like buying things when they're cheap and starting to give me a sign they might be moving. Well, I've got convergence on the market catcher. I got a couple kahunas and pocket pivots, a mobile breakout from the squeeze, and a buy signal on the weekly. I told you I liked Alaska Air and American. There they are. Don't know anything about this cricket, except it's an IPO that is breaking out from the 50, mobile breakout from a squeeze, pocket pivot, and kahuna. I can tell you that IPOs have been doing very well, so it's one I want to watch and maybe participate in. Apps, all right, so I was I had owned a position, and so when it did this, I was sort of a naysayer to somebody on the board and said, nah, I'll believe it when I see it. And it pulled back after touching the 200. Well, it forcefully broke out of it this week. So I like in apps, and I expanded my position. Tesla, we already looked at. Fifth Third Bank is one of the banks breaking out. And again, rates go up, banks are going to be happy. Bunch of banks. Here's PacWest, here's Sterling, here's Washington Financial, here's Western Alliance. They're all stocks that have been basing that look like they're ready to break out. Pick your pleasure. Olin Corp is a diversified chemicals play. Again, I get suckered in by the multiple kahunas, the mobile breakout and the squeeze. Don't know anything about molecular templates, just I look sometimes will bottom fish. Boyd Gaming, this was one of the gaming stocks I liked the charts better. Alliance Data Systems is a big company, not a new name, a company that had fallen a couple times. I remember the stock was, Honeywell tried buying them, 280, dropped all the way down to 30 in March of 2020. It's been slowly moving its way back up. Why do I like it? Two kahunas, person buy, mobile breakup from a squeeze, taking out the moving averages and the chandelier stop. Discover, if you want to own a credit card, this one looked interesting. Every Holdings is specialty finance. Again, a stock that might benefit from rising rates, a couple of kahunas and a breakout. We looked at Carnival and Norwegian. Big banks will also benefit, although they're kind of a loosey chart, pays a dividend. Bank of America, it's one of my biggest holdings. JP Morgan looks the same. We talked about Truist as well. Overstock, kind of in a range here at the bottom of the range. Kahuna, mobile breakout, squeeze, broke out above its resistance lines. Overstock. Energy names, we looked at APA, Callan, Diamondback, Hess, Marathon. Pioneer is probably the one I like the most. I'm not going to buy all of them. I might buy one of them. I already have 3 of them, but I think you want to have something like this in your portfolio, and if you don't have some energy, you might want to look. Float Controls Island, this is an industrial, some earnings per share growth. Why is it here? Love the uptrend, love the pullback, and now it's got momentum as it's taking out its resistance. So I like Xylem, XYL. S&P Global, not as dramatic, but sideways move, some momentum coming in. Another energy, Imperial Oil. Alteryx is a communication stop. This has been a past high flyer. I've made money on this, lost a lot in March last year on this. Why? Because I see multiple kahunas. I'm a sucker for that. Pocket pivots, mobile breakout, and look at person market catcher, bullish convergence. Broken record. Now, if travel's going to work, they're going to have to buy their ticket somewhere. Here's Expedia and TripAdvisor, were a couple of stocks. Again, look at all these kahunas. 1, 2, 3. I mean, obviously you've got to get through resistance here, but that one looks interesting to me. I talked about Alphabet, 2 alphabets there, talked about Snap, talked about Twitter, and then insurance is in the finances. We've looked at Progressive several times. It really broke out this week. Lincoln National looks like it's ready to run. It had multiple kahunas as well. Wyndham, same story as the airlines, cruise ships, and others breaking out. The hotels were strong. And Costco, I love the pattern, uptrend, sideways, breakout, kahuna, person buy, mobile breakout from the squeeze, in a pullback. I love Costco. I love to shop, and I love their hot dogs. Don't tell my wife. This one probably does not deserve to be on the list. This is a IPO that has failed, yet it compelled me because I saw 1, 2, 3, 4 kahunas in a row. I almost never see 3 or 4 kahunas in a row. A mobile breakout from a squeeze and a person buy. It deserves to be watched, not necessarily bought. Party City, again, we're going on airplanes, we're going on cruise ships, we're probably inviting our friends over for birthday parties and other things. Party City breaking out above its 200 and its 50, multiple kahunas. Talked about AMD. Analog Devices has already started running. Probably too late to be chasing that one. I showed you Texas Instruments. So it's amazing how many of those stocks actually were in. Actually, I don't want to do that yet. In our top 10 group. So on that note, I'm going to say goodnight. At least I kept it under an hour and a half this time. So once again, my name is Jeffrey Scott. I am a volunteer person that started doing this to help people understand how to use Hgsi. I've got no affiliations with Hgsi or any other software companies. What I've shown you is for education only. If you decide to buy something, you're buying it at your own risk. And if you use options, I refer you to the Options Industry Council. Have a great week. If you want to know about my computer, just give me an email, hgsidoc@gmail.com. Bye, everybody.